What's going on, everybody? It's Stas here. So in this video, we're going to be breaking down 5 stocks that I'm looking to buy as the stock market is finally starting to see a sell-off. And let me tell you guys, I've been waiting for this. I'm prepared for this, and I'm super excited about this sell-off. But before we get into these 5 stocks, let's talk about what happened last week in the stock market. We can see here on the S&P and honestly on the Dow and the NASDAQ as well. On Monday, Tuesday, and Wednesday, we were smooth sailing. S&P actually hit an all-time high on Wednesday, but as Thursday and Friday hit, it was a different story. The storm came in, and the S&P went from 3590 all the way down to 3350, which was a sell-off of around 6.5% in under 48 hours. The NASDAQ went, and mind you guys, the NASDAQ typically goes up the strongest in terms of percentage, but it also goes down typically the strongest and the hardest. The NASDAQ went from all-time high 12,400 all the way down to 11,100, which was a sell-off of 10% in under 48 hours. And the Dow Jones went from 29,200 down to about 27,600, a sell-off of around 5%. So as the markets are selling off, and trust me guys, I understand the markets could go down even further, I think it's smart to curate and create a watch list, a shopping list of stocks that you're interested in buying, and that's exactly what I'm going to be sharing with you guys in this video. And before we do get into it, hit that like button for me. Consider subscribing if you guys do enjoy the content. Join our free Discord and Facebook group, link down below in the description box. You can also claim 1 free stock from Webull, valued up to $1,600. All you have to do is deposit $100 into the account using that link down below. You get the free stock if you do that, and I also get a free stock since it is an affiliate link. So let's start off with stock number 1, which we got some interesting news on Friday. Excuse me, guys. And that stock is Tesla, ticker symbol TSLA. We all know Tesla has been the hottest stock in the markets, no doubt about it. It went from $200 to $2,000 in about a year. That's a 1,000% increase. Unbelievable. And the stock recently split, 5-to-1 split. It went from from 2,500 roughly to about 538, and it's been selling off ever since. Quite honestly, it's been selling off a lot, from 530 down to about $370 on Friday, and that was around a 30% correction in the stock. And on top of that, we got news that they're not going to be included in the S&P 500 in this go-around. The profitability metrics, and this is actually a quote from a Wedbush analyst, the profitability metrics and forecast likely was the swaying factor that might have excluded Tesla this time around. In a nutshell, Tesla not getting into the S&P 500 will be a head-scratcher to the bulls that viewed this as virtually a lock, given all the parameters met. And guess what? The companies that made it instead of Tesla were Etsy, ticker symbol ETSY, Teradyne, ticker symbol TER, and Catalent, ticker symbol CTLT. And on this news, Tesla actually went from about $418 at where it closed on Friday, and it went down about 8% after hours, all the way down to about $390. And that put us right back in the downtrend here on the 5-day, 5-minute chart that we're seeing. I mean, it looked good for the bulls on Friday as we were rallying into the close, but as that S&P catalyst hit, the stock crashed again. Well, not really crashed. It went down to about 8%. I don't know if you guys want to consider that a crash, but it went down a good amount, and it got back into the downtrend. So for this week, I'm looking to see if Tesla, and by the way, guys, tomorrow, Monday, is closed, the market that is. So on Tuesday, I'm looking to see if Tesla is going to end up taking out 370 on the bottom side. If that happens, we could get lower lows in Tesla. We could be moving to the mid-350s. And hear me out. Mid-350s is right around where this 180 SMA is going to meet Tesla on the 4-hour chart. And mind you guys, this is where Tesla has held a higher low. It's held its uptrend many times in the past. past over the past 6 months. So I'm thinking Tesla's not going to get under 350, 320, maybe not 320, more like 340 to 350. I don't think we get under there. And especially with Battery Day coming up. I think Battery Day is on the 22nd of this month or the 20th, 22nd, whatever. Elon could be looking to release some interesting news, some exciting news, update us investors on how the company is progressing in certain aspects, and this could end up shooting the stock price up. So even though we didn't get included in the S&P, there are some interesting events coming up for Tesla that could cause excitement and push the stock up. And another thing worth noting is, a lot of investors and traders were pricing in the S&P inclusion, so that could be a factor for us selling off this upcoming week. So that's something worth watching. But either way, if we settle at about 350, 360, 370, I'm looking to really aggressively buy into Tesla here. And if the markets take it under 300 somehow, I'm going to be loading the boat like crazy. So watch out for Tesla. This is the number one stock for me heading into this week. And another one here that I love is PayPal. This is one that I would love to add a lot more to my position if we see a broad sell-off here in the markets and an even further sell-off in the markets. On Friday alone, PayPal went from from $200 down 6.4% to about $191. Notice it's coming up to a pretty big support here at about 180, 185. We actually held that, I believe, on Thursday at about, on Friday at about 182. So if PayPal holds 182 here, which it seems like it's doing, it could make a nice move, maybe back up to the 200s. But honestly, I'd like to get PayPal under $150, under $140. It's not going to get there unless we see a big crash across the markets, but that is where I'd go heavy in the stock, considering that I was buying into PayPal, and if you guys follow my M1 Finance Portfolio series, you guys know this. I was buying into PayPal in the high 90s, low hundreds in that account back when the PE ratio was pretty healthy. If you guys take a look here on my Yahoo Finance, PayPal's PE ratio is around an 88. That's pretty expensive. I was buying it when it was around a 30 to 40 PE, and considering its growth, if you guys take a look here at quickfs.net, I love this website to just see growth, metrics, EPS, income, all this great stuff. And no, they're not sponsoring my video. This is actually a website that I love to use, and they're not affiliated. And you guys can see, PayPal's growing at a pretty nice clip. And me personally, I am huge on fintech. I'm bullish fintech. I think we're moving towards a cashless society, and PayPal is one of those companies. Square as well, which is an honorable mention for this video. Both of these companies are going to benefit. Take a look at their revenue growth numbers, 15, 17%, 20%, 21%. This company is growing nicely, but we need to see that PE ratio come down to earth a bit. It's pricing at a bit too much growth, in my opinion. I'd like to see it at about a 40 to a 30 before I add even more money to PayPal, but I'm liking it here overall. And the next one, which kind of benefits into this cashless society over time, which I'm invested in heavily right now, is Mastercard. Ticker symbol MA. This took a sell-off of about $32 last week. It went from $367 all-time high down to about $335. We're holding this 180 SMA on the 4-hour chart at a higher low at this point in time. The RSI also got down to a healthy level, so I'm thinking as long as Mastercard could hold 320, 330. This could be an entry point for a swing trade, and honestly, for me to buy into a long-term position, I would need to see, or to add more to my long-term position, I would like to see Mastercard, let's say, under $300, maybe 290, 280, 270. I'd like to see its PE ratio let's take a look at its PE ratio right now. It's right around a 46. I'd like to see that thing under 35, 30 before adding more money into it. And if we take a look at their growth numbers, I mean, Mastercard is growing, guys. They're growing at a nice clip. I mean, their revenue's growing anywhere from 12 to 15 to 20% on the good years, and that's some good growth considering that this is a pretty massive company. It's integrated in a lot of different systems across the world, and it's not going anywhere. I mean, this is seriously a company that is worth looking at, and that I own, and I'm planning on buying more of right now, and especially if we crash even further in this market. And two more stocks here, two more companies. One of them is Google, ticker symbol GOOG. And Google, if you guys didn't know, it's called Alphabet. Let's be 100% correct here. It's Alphabet, but I like to call it Google, whatever, to each their own. But Google owns what you're watching this video on, YouTube. They own YouTube, and I'd love to own a business that pays me. Quite honestly, guys, YouTube is a source of income for me. They pay me. Google pays me. So I would like to invest, because I don't have money in Google right now directly. I would like to invest in this company. I think it's very strong. It has a lot of different a lot of different segments, from advertising, from hardware, from obviously YouTube, and so many others, that this company is not going anywhere. It could be the core of one's portfolio, right? And taking a look at it technically, it got a bit frothy at 1730. It sold off now to about 1590. That's a sell-off of about 10% from its peak. It seems like it is holding the 180 SMA here on the 4-hour chart. So as long as it maintains that, as long as it does hold this as a higher low, I think this could be a nice swing trade, maybe back up to the mid 1600s, maybe 1700. So watch out for that. But for me to get into Google as a long-term investment, I'd need to see its PE ratio and take a look at it now. I mean, right now, Google's PE is around a 35 last time I checked, which isn't that bad compared to some other ones. Actually, no, it's more like 34. Anyway, it's 34, 35, which isn't as bad as some others, but its forward P, I think, is 31 last time I checked. Yep, 31 forward P. So I'd like to see Google, I mean, anything around a 20 to 25 PE, that is where I'd start to load the boat up on Google and add some money into it. Let's say if it goes to, let's say, maybe $1,200, $1,300, $1,100, anything under $1,000, guys. I'm kicking myself actually for not buying it back in March, buying heavy back in March. But anything close to $1,000 and especially under $1,000, I'd be loading the boat on as a long-term investor. And let me just show you guys some of these Google metrics on QuickFS here. Let's go. GOOG. I mean, this company's growing a lot despite it already being a beast. It's still growing at 20 to 25% to 18% clips. You know, it's incredible growth numbers here for Google. And with everything they own, and again, they own YouTube, what you're watching on, with all this stuff growing still and continuing to grow for years to come, at least in my opinion, I think Google's great. And a company here that it's not really a tech stock, growth oriented, but I would love to add is Lowe's, ticker symbol LOW. This one recently took a hit from 172 down to about 156. On Friday, it was down about 3.2% alone, and from the peak, it is down about 9%. And this is a company that, if we take a look on QuickFS, I mean, comparing it to some of the ones we already talked about, Lowe's does not grow that much. I mean, it grows, but not at 15 to 20% clips, more like 3 to 5 to maybe 8 to 10% on a good year. So it's growing, but not that much. But what's you know, who's to say that you can't have a low growth kind of a value stock in your portfolio along with growth stocks? Don't be scared to mix your stocks, guys, right? So Lowe's, despite it being a pretty slow growing stock, I think it's worth owning in people's portfolios. I mean, take a look here on Yahoo Finance. The PE ratio on Lowe's is pretty expensive. Actually, it's not that bad. It's about 2021. It's less than Home Depot. So if you want to compare Lowe's to Home Depot, I think Home Depot's PE was around a 24 last time I checked, right? You guys can see it here, right around 24. Yup. So it's cheaper than Home Depot in terms of Lowe's. It's cheaper. But one thing worth noting, it pays a lower dividend than Lowe's, than Home Depot at about 1.5%. And the truth is, it really depends on what you prefer. Do you prefer Lowe's? Do you prefer Home Depot? It's really up to you. You really can't go wrong, in my opinion. But me, I rather look at Lowe's. It has a cheaper PE, and if the stock gets down to a 15 PE somehow, under 15, the dividend starts to get around 3% as the stock drops, 3.5%. Maybe, that is where I'd consider buying a good amount of Lowe's, especially if it got under, let's say, 120, 110, even under $100, guys. That is where I'd load the boat on this particular stock. So overall, these are 5 stocks here that I'm looking to buy as the stock market is selling off, and if the market sells off even further, right, I'm looking to add even more money into these stocks. So I hope you all enjoyed this video. A quicker video today since the market is closed tomorrow, but I still wanted to get some content out for you guys. And yeah, if you did enjoy it, hit that like button for me. Consider subscribing to the channel, and make sure to subscribe, guys, because tomorrow I'm going to have another video going over more stocks that I'm watching for this upcoming week. So you don't want to miss out on that. And don't forget to join our Discord chat. It's free. Same with our Facebook group. That's also free. Link down below in the description box. You can also claim 1 free stock from Webull valued up to $1,600. All you have to do is click that link, sign up, deposit $100, and that is how you claim that 1 free stock. So I'll catch you all in the next video. Thanks for watching. As always, it means the world to me, guys. Stay safe out there. Good luck in this crazy market. Enjoy your extended weekend. Peace out.